Today, we are looking at the absolute perfect storm of two gigantic trends: the crazy, insatiable power demand from AI and the huge comeback of nuclear energy. We're diving deep into a company called Oklo, and the question we have to ask is pretty simple. Is this thing pure hype, or are we looking at the ground floor of what could be a $100 billion company? Let's find out. Welcome to ValueVest Daily, where we dig into the best value and momentum opportunities out there to help you put your money to work. So let's just frame the problem for a second, because it's a big one. This whole AI revolution we're living through, from ChatGPT to these massive data centers, well, it runs on one thing: electricity. And we're not talking about a little bit more, we're talking about an almost unimaginable amount of it. It's creating a real energy crunch. So the billion-dollar question is, where is all that clean, reliable power going to come from? To figure that out, we're going to tear apart Oklo today. First, we'll get into their big play for the AI space. Then, we'll crunch the numbers on this pre-revenue company. After that, and this is the exciting part, we'll explore their technology and what makes it such a potential game changer. We'll also look at the charts, see who's buying, and finally, we'll give our verdict, weighing the massive risks against some truly incredible rewards. All right, first up, what exactly is Oklo trying to do? Well, like the slide says, this is a startup that hasn't sold a thing yet, but it's already valued at over $16 billion. Their goal is, frankly, audacious. They want to build and roll out advanced fission microreactors, tiny nuclear plants, specifically to power the data centers that are the heart and soul of the AI industry. So how in the world does a company with that kind of mission get a valuation that high? Let's look at the numbers. And it's so important to remember, we are looking at a company that is valued 100% on its future potential, not on its current earnings, because, well, there aren't any. And that potential, as of November 10th, 2025, is valued at a staggering $16.65 billion. Just let that sink in for a moment. That is a massive number for a company with absolutely zero revenue. And it tells you everything you need to know about the level of excitement and, speculation that's already baked into this stock. Now, this table right here paints the perfect picture of a company that is deep in the R&D phase. The PE ratio? NA. Can't have a price-to-earnings ratio with no earnings, right? The return on equity is negative because they're pouring money into growth. But, and this is key, look at that debt-to-equity ratio. It's a tiny 0.05. That is a huge green flag, folks. It means they're funding the stream without drowning in debt. The negative cash flow? Totally expected. They're burning cash to build the future. So if you're thinking about investing, this timeline is absolutely everything. The next big thing is their Q3 earnings call on November 11th. But the real stuff, the stuff that matters, that's way down the road. They're not expecting their first dollar of revenue until 2027. They're not even hoping to break even until 2028. This is the absolute definition of a long-term play. You've got to have patience for this one. But here it is. This is the potential prize for all that patience. If, and it's a big if Oklo can hit their targets, analysts are projecting a market cap somewhere between $50 and $100 billion by 2030. You heard that right. That's a potential 3 to 6 times your money from where we are today. And that right there is why so many people are willing to overlook the fact that they're not making any money yet. Okay, so what is this revolutionary tech that could possibly justify all this hype? This is where we find Oklo's real competitive advantage. It's moat. And the best way I've heard it described is like a perpetual power engine that cleans up after itself. I know, it sounds like something straight out of a sci-fi movie, so let's actually look at how it works. And this slide just lays it out perfectly. On one side, you have your granddaddy's nuclear reactor that needs brand new enriched uranium. On the other side, you've got Oklo. Their reactor can literally run on recycled nuclear waste. It squeezes 30 times more energy out of that same fuel. It's walk-away safe, which means its own physics stop it from melting down, unlike old reactors that need pumps and power to stay cool. And maybe the biggest game changer of all, it reduces the final amount of nuclear waste by 90%. Let's break down the science real quick. First, it recycles. It literally takes the garbage from old power plants, the stuff we've been trying to figure out what to do with for decades, and turns it into fuel. Second, it's a breeder reactor. This is wild. The process inside actually creates more fuel than it uses up. And third, its safety isn't about computers and pumps that can fail. It's just pure physics. If it gets too hot, the reaction just slows down. It cools itself. This is the absolute core of the entire bull case for Oklo.
Okay, so the technology sounds like a world beater, but what's the market telling us right now? What are the charts saying? And more importantly, where is the big money, the smart money placing its bets? Let's take a look.
So the technical picture here is actually pretty fascinating because it's so mixed. In the short term, the stock's below its 50-day moving average, which is a sell signal for traders. But long term, it's still way above its 200-day average. That's a classic buy signal for investors. But here's what's really catching my eye. The RSI, the Relative Strength Index, is at 28. Anything below 30 is considered oversold. That could mean the recent dip has been overdone and a bounce might be coming. Now this slide right here, this might be the single most important piece of data for a lot of you. Over 85% of Oklo stock is owned by institutions. We're talking about the biggest funds on Wall Street, pension funds, you name it. That is an insanely high number, and it's a massive vote of confidence from the so-called smart money. And they're not just holding on for the ride, they are actively buying more. Just last quarter, Vanguard upped its stake by 15%. BlackRock added 10%. And over the last year, 438 new big money players jumped in, pouring a net $1.27 billion into the stock. These guys are building their positions for the long haul. So what do the pros on Wall Street think it's worth? Well, it's interesting. The short-term average target is actually around $98, but the more bullish analysts see it going to $175. But look at the long-term case. In 5 years, if things go right, some analysts believe this stock could hit $500 a share. That is the kind of home run potential that gets everyone's attention. All right, let's land the plane here. It's time to bring it all together and weigh the pros and cons. We've seen the incredible, mind-blowing potential, but we absolutely have to be clear-eyed about the very real risks involved here. The bull case, let's be honest, is powerful. You've got this massive, unstoppable demand from AI. The technology itself seems to be a huge leap forward, a real competitive moat. They're already locking in key partnerships. You've got big-time government support and backers like Sam Altman from OpenAI. And then there's that 85% institutional ownership that just screams conviction. But, and you have to listen to this part, the bear case is just as serious. They have zero revenue, and they won't for years. That means the valuation is pure speculation right now. A single hiccup with regulators could be a disaster. They've also got tough competition from guys like NewScale and Bill Gates' TerraPower. And finally, they'll probably need to raise more cash later, which could water down the value for today's shareholders. So that leaves us with the ultimate question, doesn't it? Is Oklo a calculated moonshot on the future of energy, a super high-risk, super high-reward bet? Or is it just speculative hype, a great story stock that's gotten way ahead of itself and is eventually going to burn out? That's the question every single person looking at this stock has to answer for themselves. And of course, just a reminder, this is all for informational purposes. It is not financial advice. Please, please, please do your own research before you make any decisions. If you got some value out of this breakdown today, do us a huge favor and hit that subscribe button, give us a like, and share ValueVest daily. It helps us keep bringing you these totally unbiased opportunities every single day. And hey, one more thing. Drop a comment below and let us know if there's a specific ticker you want us to do a deep dive on next. We read all of them. Thanks for watching.